All right, welcome everyone. We will just wait a few minutes here to go live on all the different platforms. Yeah, we'll bring up the chat here in the meantime so people can check in. Good morning, good morning. Hello, good morning. Thank you everybody for tuning in. Sorry for being a little late today, a couple technical difficulties, but we are live. So we'll just wait just a few minutes here. Make sure we go live on all the different platforms. Quite a few people dropping comments in there. Hello, good morning. Just hang tight with us while we go live everywhere. Good morning, team. Good morning, everybody. Earlier morning for some than others, depending on what part of the country you're in. Right. Perfect. So for those of you just tuning in, we're just waiting a minute just to go live everywhere on all the platforms, get us all up and running here, and give everybody a chance to jump on. So just hang tight for 1 second. All right. Okay, I think we are live everywhere, so we can start to get into it here. 1 second. All right, I think we are good to go. You want to take the comments off the screen, Nick? All right, so let's get into it. Welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here today by our president, Nicholas Hiersche, and our sales manager, Jose Gonzalez. What we do every morning is go through the live rates so we can see the different rates for the different programs. And then we do a deep dive into a different topic every day. And as you can see on the graphic on the screen, today we're going to be talking about SBA loans. So an amazing opportunity for American citizens to get an SBA loan. And Jose actually has some quotes pulled up, some real life quotes, so we can break down how those work. So we will go over that here after we get into the live rates. But like we do every morning, Nick will go ahead and pull up the actual rates, and we'll go through our different, not just conventional and FHA programs, but also some of the non-QM programs that we specialize at here at the Mortgage Calculator. So thank you everybody for tuning in. Nick, let's go ahead and pull it up and go through the live rates for this morning. It is February 22nd, just after 11 a.m. All of the pricing is live. So let's go ahead and pull it up and check it out.
All right, let's pull up the pricing tool for today. And just like we do every day, we're going to set up a few basic scenarios. This is a pricing tool that is only for licensed mortgage professionals. If you need a full quote, please get with our team so they can send you a full detailed quote. But let me go ahead and set up our scenario. For all of our scenarios today, we're going to do an 80% loan to value, 20% down payment. For all of our scenarios today, we're going to do 99 desired price. That means 1 discount point in cost. We're going to compare conforming FHA and our thousands of non-QM expanded guidelines programs. We will not do VA. That's only for our qualified veterans, and only they can apply for those. If you do need a quote, let us know. And for USDA, that is only for rural housing in a rural designated area by USDA. So if you're looking in that area, let us know, but we won't do those live today. So we'll start with conforming. We're going to do a purchase, 30-year fixed, primary, single family, 1 unit, Florida, Miami-Dade. For all of our examples, we use a 760 estimated FICO, and for all of our examples, we use an estimated 40 debt to income ratio. So let's check out the rates this morning. So as we do every morning, these are the specialty programs. So these ones are only for customers that have under an area median income. So let's cruise down to the first standard one that pops up. So it looks like the first one, conforming 30-year fix, looks like about the same as yesterday. We're at a 6.875 rate for 1 discount point in cost. Obviously, the rates have gone up significantly in the last couple weeks with all of the economic data that's been coming out. So we see those live on the show here change. Now, if a customer doesn't qualify for a conventional loan, typically the next option that we'll do for an example, pull up the same scenario, but we'll do FHA. FHA usually allows us more debt to income and a few other more lenient guidelines that we can typically qualify a borrower who may not qualify for conventional for an FHA. So let's check out our FHA rates this morning so we can compare. And it looks like FHA has made some moves. They're a little bit behind, but right now we're at a 6% interest rate for 0.875 in discount point cost. So a little more than it was yesterday. Again, the markets are moving in the direction we don't always really want them to move, but that's why we do the show so we can watch them as they go. Now, where we specialize here at the Mortgage Calculator is if a customer doesn't qualify for conventional or FHA. Typically, other lenders or banks won't have other options, but thankfully, we can set up the same scenario here, and we can click on expanded guidelines. We have over 4,500 loan programs under expanded guidelines where we can use alternative income documentation and get around some of the other guidelines or issues that may come up with a conventional or FHA loan. So we'll keep everything else the same, purchase, 30-year fixed primary, but you'll see we have a new option here for income verification. So for our non-QM programs, let me scroll down so it goes down. We can do full doc, obviously, which is full tax return, which is the same as conforming or FHA, but where it really gets cool is we can do all of these other options. 1-year alt doc, 2-year alt doc, asset related, doesn't even involve employment. Business bank statements, 12 and 24 months, very popular. DSCR, loans for investment properties, very popular. We'll do those here in a minute. And personal bank statement, 12 and 24 months are probably the most popular program. So we're going to do that for the show like we do every day. We'll do a personal 12 months of bank statement for a self-employed borrower. And we're going to use those 12 bank statements to determine their debt to income ratio. So instead of using 2 years of tax returns, which for many self-employed individuals, they do have write-offs and other things where maybe they won't qualify with 2 years tax returns for full doc. So we're going to use 12 months of personal bank statements to determine their actual cash situation and determine their debt to income based on those bank statements. So very different way to calculate income. A lot of times our borrowers may qualify for a certain amount with full doc conventional, but we can qualify for much more using these bank statement methods. So this is not only a solution for someone who wouldn't otherwise qualify, but we can usually qualify our borrowers for more money when we use these alternative programs. So let's check these out today. These rates are going to be higher typically than conventional, but you'll see here we have some great options. So 7.625, getting very comparable there to conventional, since conventional is the high sixes. Now we're in the mid sevens with bank statements, which is amazing. We love when those two worlds kind of collide. And you see here the 7.625 rate is 0.625 in discount points. So a lot more flexibility in the discount points there as well. So the cost is very comparable. Actually, if you look at the APR, it was very comparable there. I believe it was just over a 7 APR there on the conforming. So compare apples to apples across all these programs, and these non-QM programs are even more viable today than they may have been before because we can use alternative income, and you see the rates are not bad at all. So before we pass it over to Jose for a deep dive example, we always want to go into the investment property options. So if we switch this to investment property, we love to work with our investors, whether it's your first investment property or you have 100 investment properties. We really only have A couple categories to go through here. So conforming, not many people take advantage of the conforming because there are some restrictions there, but we have tons of options under expanded guidelines and non-QM. And remember, FHA, VA, USDA, those are not applicable for investment properties. So we'll quickly compare our conforming with our amazing non-QM options. So if we do conforming conventional, we can still do the same scenario, 80% loan, 20% down payment, keep everything else the same, but let's check out what the rates are here when we switch it to investment. And you'll see that there are some significant additional costs that Fannie Mae and Freddie Mac, the government-sponsored enterprises that run these programs, they have added some additional fees here for investment properties. So you see some rates here that are about the 7% rate here at the top for 3.375 in discount points. So that's the issue here. A lot of our investors, they don't want to pay this many discount points, 3.375, and you see some here creeping up into the fours. So there's just no options for one discount point in cost when we're doing conventional. This is probably the highest rate this program is offering right now, and unfortunately that's going to cost 3.375. Many of our investors don't mind going higher in the rate in order to reduce the discount points. But we're limited here on conventional. We don't really have that option. So that's why we absolutely love to use our non-QM programs, which have tons of options. So let's switch this back over. Our last scenario for the quick pricer, we'll do 80 LTV, switch this to expanded guidelines and investment property. And we'll see here we have all of our alternative income options, but now we can use our investor DSCR option for investment properties. This is by far the most popular program because it doesn't actually require any income verification for the borrower, at least. We're going to use the estimated rent from the property in order to determine that that rent can typically cover the PITIA of the mortgage payment, right? The cost of the mortgage. So we're not going to use any borrower personal income, any borrower employment, and just look at the property. Does the property cash flow essentially? And we even have options for properties that don't quite cash flow, or maybe 0.75 cash flow figure, or even some with no ratio at all. But let's check out these options for DSCR. And keep in mind, there's typically a prepayment penalty on a non-QM investment property loan. So all of our shows here, we always do a standard 3-year. That's pretty standard. You can do a 0 option, but that limits your loan programs and obviously increases the cost. And you can even do a 5-year option if you're going to hold the property for a long time, and that will decrease the cost a little bit. But we're always going to do 3-year on the show here as our standard option. So let's check out our DSCR rates today. So these are the same as they were before. You see the DSCR rates don't change much with the markets or as much as the conventional and the other programs do. So we see basically the same as we did yesterday, 8.375 rate for 0.85 in discount point costs. So again, our investors love these options. If they can qualify conventional, great. You saw that conventional option was a 7% rate, but most investors don't mind going up to an 8% rate as long as the property cash flows, and they're going to reduce the costs out of pocket because we're going from 3.75, I believe was the other quote for conventional, to 0.875 in cost. So our investors love these options, and of course, much easier, much cleaner, much quicker because no income or employment involved. So our investors love these programs. You can also start, do a cash out on 3, 5, 10 properties in order to purchase 5, 10, 20 more properties all at the same time with these DSCR loans because they're not based on personal income and stuff like that. So these programs are amazing. But let's go ahead and switch gears, and we'll go into Jose for a deep dive into one of our programs here. So I believe Jose has a quote up. Let me go ahead and switch the screens over. So you ready there, Jose? Pop up our graphic here as well.
Yes, sir.
Is Jose frozen?
Are you ready?
All right.
Uh-oh. I think he was frozen. I think he just dropped.
Dropped off completely. Oh, goodness. Well, we did want to go into the SBA rates for today. We have some amazing SBA loan program options. These would be for borrowers who are going to be owner occupants with their self-employed business, right? So all U.S. citizens that are eligible, they can use these SBA programs. So the only requirement typically to start the process for eligibility as a citizen. But then, of course, there's a loan involved, so we still have to underwrite the loan. But these SBA programs are pretty cool for owner-occupied properties, which are very difficult to traditionally finance. So, we do appreciate the SBA for giving us these options for our borrowers who would kind of be stuck, right? If you're an owner-occupied business, there's not a lot of lender programs out there for owner-occupied, right? Most of the commercial programs for, commercial, retail, office, anything like that, that's going to be a large commercial property, is going to be based on the income of that property, right? It's going to be an investment property. We're going to make sure it's rented. So a lot of times when a customer comes to us and they want to purchase the building that they're currently renting, things like that, where it would be an owner-occupied property, those become a little difficult. And thankfully, we have the SBA to thank for partnering with all kinds of local banks and lenders like us in order to provide solutions for these borrowers who would essentially be stuck, if we didn't have these options. So the SBA, basically what they do is they guarantee a certain amount of the loan. So we can do typically as low as 5% down, I believe, is what the options are we have right now. Most common is 10% down for the borrower. So usually the borrower puts down 10%. Typically the local bank or partner puts down 40%. And then the SBA typically guarantees 50% of the loan. So they structure it as two loans, the SBA taking a portion and the local bank taking a portion. And essentially what we do is we partner with a local bank or outlet, whoever's going to actually hold that loan, that's going to service that commercial loan, and they're going to approve the loan. As long as they're an SBA approved entity, they're going to approve the loan, and SBA will use their approval. So essentially, as long as that first loan is approved, let me go to the split screen here. If it's ready. As long as that first loan is approved with the commercial partner, right, the real bank that's going to do it, SBA will stamp it and approve it. Looks like we lost Jose again. I don't think he's going to be able to do it. So the SBA is super cool options that we have. I don't have the live rates because Jose has his quote pulled up with the actual rate quotes for today. But there are some amazing rates, and they do vary by location too. So what we'll do is we'll find a partner bank. So we have hundreds of other banks that typically will be a local type bank. We have a couple national players that we work with as well that will help us do these loans in different areas. But typically, you'll find a local partner bank that will do it, and they will underwrite that first loan. And as long as they're okay with giving the loan and they're an SBA approved institution, then the SBA will guarantee the other portion of it. You live, Jose?
Popping in. Hello.
Here, he sent me the quote, so I can pull it up. Okay, so let me pull this up then.
Yeah, there you go. Maybe we'll have to do that.
Yeah, let's just do that. Okay. So Jose sent me one quote, and Jose sent me another one. Ooh, he did get the 100. Okay. So, as I said before, there's a couple options here. So let's see what Jose sent us. Boom. All right, cool. Let me go back to more of the full screen mode then. All right. So now that we talked about, what SBA is, these are for owner-occupied properties. This is the traditional one that I was just mentioning. So the 90% LTV, typically the borrower, the business that's applying is going to put down 10% of their own funds into the transaction. And as I mentioned, usually a local bank or institution that we're going to help find is going to do 40%, and the SBA will typically do the other 50%. So it's essentially two loans, but as far as this quote goes, the bank is doing both sides, because that's what I wanted to explain is the SBA doesn't do loans, right? The SBA partners with banks, and they trust banks, right? As long as the bank does the loan and the bank agrees to put up 40% of their money, the SBA will write a check for the rest, right? And have their different rates. They usually have a little bit of a variable rate on their end, but it's a very different rate than the other part. So you see here, Jose has a estimate put together for a 90% LTV purchase for someone to, say, purchase their retail or office location. He wrote in here in the notes, this is a full doc loan program. Let me see if I can zoom in actually a little bit. Yeah. This is a full doc loan program for owner-occupied business where the owner occupies at least 50.01% of the space. So you still can buy a multi-unit, say you got to buy a little strip mall, but you're the main anchor, but you have a couple other tenants, you can do that, right? Because it's not often that everybody can find a building that fits perfectly for just their business. So the SBA does allow you to have other units or whatever, as long as you're the main occupier. So that's a big distinction there. A lot of people get stuck in that kind of space, but that's a good thing, and that Jose put in the notes. And you'll see here our amazing rates here on this 10.75 rate. For discount points here, it's just almost 2 discount points there. And you get 10% down, 100,000 down on a $1 million purchase. So these are amazing options for someone to switch from a renter for life, right? A leaser for life, lessor, to the actual landlord, right? You're your own landlord, and you can even be a landlord for other people in your building if you have a couple other subunits or whatever. So this is an amazing option to really empower our self-employed borrowers who are ready and stable, right? As long as you're paying rent every month, the government would be happy to let you into this program in order to get you where you own your own property and you're paying rent to yourself, essentially, right? You want to pay rent to your own business, and the government is here to help us do that with these cool SBA programs. It looks like Jose popped in here. Just don't try to talk, Jose. You can just look pretty and you'll be fine.
Well, no, I think you can hear me now. I was just having a little glitch here. But,
okay. Do you want to talk about it then? Do you want to go over any details on this one?
Yes, sir.
Okay.
Yeah, the next one is the mind blower.
Okay.
The next one is the one that most people have no idea exists. So maybe you can bring that one up.
Okay, so this is the less common option, but Jose's got it. Yeah. So lay it on us, buddy.
Yeah, this is the one when you dig deep. This is the one that's gonna wow them, because contrary to popular belief, there is 100% financing possible on these investment property deals. Because now remember, this is an owner occupied investment, right? So it's sort of for SBA purposes, they look at that as a positive thing, as opposed to normally when you're sizing up these deals, the outlets prefer that they not be owner occupied rental properties. So this is something totally different, right? But here we're trying to promote business ownership. We're trying to strengthen the economy of the United States of America. So here we have, are you ready for this? 100% financing for this purchase, as long as, here's the part where we put on our consulting hat, as long as the borrower currently occupies not this particular space, but occupies a space as a rental for his business for at least the past 2 years, which means that they have to be in business also for at least 2 years. Because what they're looking at here, obviously, is their ability to make the payment on this rental space and consequently that's their VOM of housing history, that, or payment history on the business's housing, if you want to look at it that way. So as long as they're a business established at least 2 years and they've been occupying a space for their business for at least 2 years, they are able to do this. Then this scenario here would be perfect. For example, the business is shipping logistics business, right? And they occupy warehouse space close to the airport. And part of it is for their administrative offices, and the other part of it is for the storage for everything that they move with their logistics business. So they could either buy that space that they're in, if that's the opportunity, or buy another space similar for their business, and they will be able to get 100% financing. Now, the rates that you're looking at there are tied in to the prime rate. So, the prime rate is hovering somewhere around 7.5, 7.7%. So there's really not that much of a margin on that rate. So, please keep that in mind. This is also 100% financing for this opportunity. So really good deals. As the prime rate drops, these rates will drop as well, but that is where we are right now. And the good thing about it is that it is 100% financing. The stumbling block on getting into these opportunities normally for the borrower is not the payment, is usually the money that they have to come up with to be able to obtain the asset. Most of them would not really mind whatever the rate is if you can get them in for 100% financing and just their closing costs. So great opportunity here. You just have to be able to put everything into perspective and understand that 10.75 in this rate environment where the prime rate is 7.5, 7.75 is a very competitive rate. Remember, the prime rate was hovering, in the low single digits forever. These rates were 4%, 5%. So they will come back down.
Yeah, these are variable, right? So they're going to adjust every year. Typically, they're going to be an arm like a 5.1, 5 something. So definitely keep that in mind that they will go down, right? Just as they've gone up, as you see here, they will go down, like Jose said. So that's a good thing to note there, buddy. All right. Well, thank you, sir.
I do want to just make a note too. Actually, Nick and I did an SBA loan for one of our businesses, and it worked out very well. It was a very good program.
The 100% is hard, right? So we did the 10% because that's the more common. So anybody will do the 10%, really. It's definitely more of a unicorn that Jose found there with the 100% option. So definitely get with us if you think you might qualify for that 100%. It is hard to find. It is not always out there. So that's very cool that we have that option.
Absolutely. So just to kind of recap here, SBA loan, amazing program. But again, it is owner occupied, right? That's one of the biggest parts about it. And if you would like to get a quote on a situation, then you can get with one of our loan officers. We have over 350 loan officers all around the country. We're licensed in 22 states, and we can do business purpose loans in most states as well. Maybe one of our loan officers shared this video with you. That's great. Get with them. They can get you a quote within minutes. And if not, you can go to our website, themortgagecalculator.com, and we can connect you with one of our loan officers. Now, as you can see here from the different programs we went over today and the programs we go over every day, our loan officers are consultants that can walk you through these different programs, right? So not only do we do conventional FHA, USDA, VA, but we take it a step further through all of the expanded guidelines products that we have, such as bank statement loans and DSCR, no income, no employment verification, investment loans, all the way to these special SBA products, commercial, fix and flip. We have everything under the sun, and our loan officers can take you through all of those different options and get you some instant quotes as well. So definitely check us out, themortgagecalculator.com. We can pair you up with one of our loan consultants to help you with whatever it is that you are looking to do. We do this show every weekday at 11 a.m. Eastern time. So definitely tune in where we go through the different rates. You can see how the rates are changing day to day. And then we do a deep dive into a different topic every day, like we did for these SBA loans. So tune in 11 a.m. Eastern time, weekdays. Thank you, Nick. Thank you, Jose. Thank you, everyone, for tuning in, and we'll hope to see you tomorrow.